Hey, good morning and welcome to Driving Markets and welcome to our Southeast Asia clients, Australians, New Zealanders, Japanese, Chinese, Singapore. Good afternoon. Okay, so let's just catch up. So again, the markets are very, very whippy. They're whippy on the back of the interest rates and inflation fears. So interest rates are rising and will rise far more aggressively than they have so far. And obviously got inflation. But let's look at a significant story yesterday. Do you remember Snapchat when it launched around about 4 years ago? I think it was 4 years ago or 5 years ago. It was launched at around about $20 billion. If the viewers can correct me on when Snapchat launched, that'd be very interesting. But Snapchat launched about 4 or 5 years ago, and it was launched at $20 billion. Okay, yesterday alone, it had 41% wiped off its value in one day, the biggest fall in history of any share. Okay, 41% in one day. And that was simply because they came out with very poor results and a very poor forecast. So the Snapchat pulled down all the social media, whether it was Facebook, whether it was Twitter, whether it was Alphabet, all of them fell. Now, let's just look at one at a time and let's just see exactly what's going on regarding social media. Social media is dependent on the viewer and more dependent on advertising revenue. All the revenue comes from its advertising. Now, the social media is competing for the same dollar across the board. All the social media platforms are competing for the same dollar, and that same dollar has just got less in the last 5 months because the companies that have been advertising on social media have been the high growth stocks, the high risk stocks. They've been advertising a lot on social media, and that's where most of the revenue has come from, on the social media platforms. However, that revenue now is contracted because the liquidity in the marketplace, the liquidity amongst these companies is tight. It's tight on the back of reduced asset values. It's tight on the back of rising interest rates. And it's tight on the back of reduced margins because it's costing them more either to produce those goods or to get hold of those goods for delivery. So all of those factors are taking money out of the company's resources, and therefore the advertising revenue is going to be tested or it's going to be stretched. Now, assuming that they stay the same, assuming the advertising revenue of several companies stays the same, even if it stays the same, it's not going to produce the levels of earnings that these social media platforms are used to, because only a few of the companies might stay the same. And even if it does stay the same, they're going to ask for more competitive pricing, which is going to put further pressure on these social media firms. And some of these social media firms, like Facebook, are totally dependent on advertising revenue, as is Twitter, as is Snapchat, as is Alphabet. Now, Alphabet's got a Google backing, so it's slightly different, but they are totally dependent on revenue from advertising. And that revenue has just fallen away. And therefore, it's pushed all the social media platforms completely down. And what you're likely to have going forward is Snapchat will probably lose another 40-50% in the very near future. Its values drop from 20 billion down to about 2 billion or 3 billion, and it'll probably fall even further to around about 1 billion. I don't think it's going to go bust, but it needs to raise money. It needs to raise money very, very quickly. Also, look at Facebook. Facebook's revenue is being smashed. It's crashed. And also, its new subscribers, only the quarter before last fell. Last quarter, they went up a little bit, but I can't see the new subscribers solving their problem, because the revenue is going to be massively impacted. So I reckon that Facebook is going to go down all the way down to $100 a share. In the moment, it's about 188, 187, and it looks like a sell. So all the social media platforms look like a sell. I tell you what is also interesting is Twitter. Now, Elon Musk is probably going to pull out of Twitter completely, even though there are rumors that he's still going to go ahead. But he'll go ahead at a much lower level. Twitter has very little revenue compared to the rest of them on advertising. It just hasn't managed to monetize its platform. So Twitter also looks like a sell. In addition to what I said last week, that looks like a sell on the back of Elon Musk pulling out, but it doesn't have a successful monetization policy regarding its particular platform. So the social media platforms generally are a sell. Looking elsewhere in the market, so the Nasdaq fell yesterday 2.74% on the back of that. The Nasdaq's likely to fall further going forward. Also, the Dow had a whippy day. The Dow was down 440 points, 450 points at one stage, and managed to claw it back and close up 50 points. So the Dow is more of a defensive. It's not there for high growth stocks, and it could be seen as a defensive index to a degree. There's a lot of money out there. So on the dips, the buyers are coming in and buying some of this trash stock. Another stock to look at, it's not even a stock, it was another IPO that was going to float, was eToro. eToro was the trading platform that was valued also at around about 10 billion, and they've had their IPO completely dumped. And the valuation of that particular SPAC, they were going to merge with someone else. SPAC's a special purpose acquisition company, and on the back of that, they were looking to merge with another company that had a valuation of 8 billion, and the valuation today is around about 2 or 3 billion, and now they have to raise $265 million just to survive. They've got to raise $265 million to survive, to get through this cash flow crisis. So there's a big pressure on the high-tech sector, and that's what this program is focused on this morning. Looking at foreign exchange, the dollar gained strength again yesterday. I do think the dollar is going to continue rising the rest of the year. I think if you are looking for a pretty good bet, then I'd go long of the dollar for the rest of this year and probably into next year. That's more or less it from Driving Markets. You can catch me on Instagram, catch me on WhatsApp, catch me on Twitter. I'm Twitter all day, posting information regarding markets, etc., etc. That's it. Have a good day. Speak to you soon.